Thank you. This morning we're joined live by Washington Trust Chief Investment Officer and Economist Scranton. Good morning to you.
Morning, Matt.
All right, so everybody's kind of like, what's going on after yesterday's, some 370-point drop in the Dow? What happened?
Well, I think what happened was the disappointment over the whole Trump controversy with Comey and worry that that's going to delay Congress from passing things. But the perspective I give people is, even though that sounds like a big number, the reality is the Dow was down less than 2% yesterday. The difference is when we were back in 2008, the Dow was down 3.5% for the same 300-point drop. So it's not that big a drop, but it seems like a big number.
Yeah, I mean, it seems like there's been some instability for months now, but yet since President Trump took office, the Dow actually up some near 12%.
Exactly.
So this blip yesterday really, I don't want to say a drop in the bucket because it was significant, but why is it any different necessarily this time than in controversies or whatever past, or is this just the market kind of correcting itself a little bit?
The market goes through those swings. The perspective I give people is for the last 9 years, as the Dow has basically doubled in value, every single year we've had a pullback sometime during that year, which has averaged 12% drop. So a 1.8% drop is, I think, is just part of that process where the market worries that it got ahead of itself, maybe now needs to pull back a little because they're worried about what Congress is actually going to accomplish.
And when you say delaying things, you're talking about things like tax reform, health care reform, things like that.
Exactly.
That a lot of these folks are paying close attention to. Finally, Steve, I guess with all this being said, the people at home that maybe have a 401k or whatever, what they want to know, what they need to know, are you advising your clients to change their investments patterns based on this one-day slump?
What we try and advise people is, especially for their 401ks, to remember that every month you're putting money in. So when the Dow drops like this, you're actually putting money in at cheaper levels. The perspective we try and give people is that the average investor hasn't been very successful of trying to guess what the market's doing. If we just look at the S&P over the last 20 years, has averaged 8.3%, bonds 5.2%, and yet the average investor has only averaged 2.1% because they react emotionally. So we really try and say, stay the course because you've got a disciplined plan going on there for a long-term investment.
All right, Steve Scranton with Washington Trust. Appreciate your time this morning.